Hi, good morning, good Tuesday morning to all of you. Again, my name is Nabil Mattar, Premium Client Manager from IG. Thank you, Ryan, for going through the fundamental news for the week. I think China news was just released about 5 minutes ago. The overall sentiment is slightly better this time around because the industrial production came out I think 8% or something. But basically, the overall sentiment was slightly better. So Aussie dollar is moving up. I'll go through the charts a bit later. But before I start, let me go through a quick disclaimer again. Now, basically, IG is only execution service. This webinar is intended for general circulation, does not take into account specific investment objectives, financial situation, or particular needs of any person. And we accept no responsibility for any use that may be made of this information and webinar. Okay, so moving on. Now, for those who are new to the webinar or have not attended any of my seminars before, I'm a big believer of price action. So every time I go through the markets, I will look in terms of whether the market is going on an uptrend, a downtrend, or consolidation. For those of you who are keen followers of the market, especially if you're looking at your charts for the past week or so, can you tell me most of the markets, what is it doing right now? When I say most of the markets, if you look at the euro dollar, the Aussie dollar, the pound dollar, the S&P, what do you think, which phase do you think we are in at the moment? Is it uptrend, downtrend, or consolidation? Just type in just a quick answer on the question box. Great, I can see a few answers coming up. Consolidation, yes, correct. Later I'll show you the charts to explain why. Now, most of the charts are experiencing a bit of consolidation at the moment because what happens that the US dollar has rallied for quite substantially for the past 2 months, which caused the euro dollar, pound dollar, Aussie dollar to drop quite a bit as well. And most of the charts are going to some sort of a consolidation phase. Now, if you know which phase the market is going through at the moment, it's easier for you to set a bias and to trade accordingly. Okay, and it's also easier for you to manage your own expectations. For example, if you're still bearish on the Aussie dollar, okay, but you know that the market is consolidating, you would be patient enough to wait for a move to happen rather than get impatient and jump out of the trade. All right, so knowing which market phase is very important, and that's where we analyze the swings of the markets. Okay, nothing like using live charts as an example. So I will jump into that right now. Again, if you guys have any questions, please feel free to type into the chat box. Okay, let me just bring up my charts. Okay, so now let me start with the S&P. Now the indices are a bit tricky at the moment simply because of this. Okay, let me just show this to you. Okay, remember I drew this big rectangle area during the last webinar, and sorry, this is Wall Street. You can get the S&P up. Okay, sorry about that. Now, this is the S&P 500. Now, we all know that it has broke a very key channel all the way from 2013, and last week we were staring down at this bearish engulfing candle on the weekly chart, isn't it? And where we were last week is that we were in the midst of this candle here, and we didn't know which support levels were going to be respected. Where are the support levels? There's one support levels all the way close to about the 1800 to 1810 area. Another support level close to the 19,000 level. Okay, 1900 level. Yeah. So my analysis was that if we are able to stay above the 1900 level, which is this level here, if we are able to stay above, then chances are the market would just be consolidating. But if we break below, then the downtrend might continue. Now, what happened was that the market did push down further, okay? But when it hit a support around the 1820 level, there are a lot of buy orders there. And what happens is that the candle couldn't close anywhere below this level. Okay, so it form a very long bullish pin candle, which shows that there's a bit of bullish momentum here. Okay, so if you look at the daily chart, all right, you can see it more clearly with how the market went down, broke below 1900, and look at the long shadows here. Okay, I like to see candlestick patterns because it tells me a bit of story or where the buyers and sellers are, especially when it coincides with support and resistance levels. So this level here got rejected in terms of, I mean, the support got respected and it bounced up, and now we're staying above 1900. Now it's a bit of a tough read because of this. Now the daily chart, it is in a downtrend. Okay, it is in a downtrend, and the key level is around this line here, which I drew, around the 1900. Now just remember, when we are looking at support and resistance in terms of longer term time frames like the daily, weekly, or even monthly, we need to look in terms of zone. So this whole level here is a red zone to me. A red zone meaning that is where the sellers might come in. Okay, it's a resistance area. So daily chart is still in a downtrend. Now, on the weekly chart, okay, the key thing is that this candle here has broke the low here. So it might be start of a downtrend or consolidation. I think last week I drew something like that. Okay, a bit of a flag. Okay, this is not a setup yet. I mean, this is just a assumption. I'm just trying to figure out what's happening here, because many times when the market, when the market, after market rallies and it gets a bit exhausted, it tends to consolidate to a flag or pennant, and then from there it will continue, whether uptrend or downtrend, we'll see. But this is something that might happen. Okay, what I'm not too sure is because the long bullish pink candle here, I'm being a bit more patient to see whether the bulls or bears are in charge. As long as we stay above the 1900 level for the week, most probably the bulls might push it up to another resistance level. But if we are below 1900, most probably it'll come back down to test the support close to 1800 again. Okay, so a lot of the indices look like that. So it's a bit tricky week. So just be patient and let the markets play itself out before you decide what you want to do. Okay, because another chart that you might want to look at is the monthly chart. Now, if you notice that the monthly chart looks very bullish still. Okay, on the weekly chart, yes, you see a big bearish engulfing candle. On the daily chart, you see a nice downtrend, but on the weekly chart, okay, it's still very, very bullish. And this candle simply, it comes down, simply is retracing to the 1800 level, and then it might push up again. All right, so just be a bit patient, because different time frames tells different stories. So, and this is the picture for most of the indices at the moment. Yep. Let me just go through a few more indices. Okay, Hang Seng. This is what I drew last week. Yeah, same levels, exactly the same levels. Again, I think the protest is still ongoing. Now they're having talks with CY Leong. So just be a bit mindful of all this news coming to the fray. But again, if you're trading the Hang Seng Index, these two levels are very key, around the 22,700 and around the 23,600 level. All right, these two lines here, because we might consolidate around this area and break out to either side before we are clear whether the market wants to continue trending up or down. Right now, it's simple consolidation. Okay, it's supported by this nice trend line from 2012, and the resistance is this level here, quite a clear level. Okay, so draw these lines for your reference. And let's see what other index we can look at. Okay, let's take a look at the Japan 225. All right, this is the weekly chart. Again, this whole section here is simply consolidating. Okay, you see it looks quite similar to the Hang Seng in the sense that it's consolidating and supported by trend line at the moment. And if you notice, most indices, right? I mean, what it does, the last week there was a bit, it's quite bearish sentiment, with the Ebola virus, the IMF downgrading the world growth, China news. So what happens that a lot of the indices try to push lower only for it to bounce back up. So which is why I say for indices, this 1-2 weeks or so might be a bit tricky, because there's a lot of fight going on between the bulls and the bears. And same thing for the Nikkei, because you see it form a nice bullish pink candle here, which means that the trend line is still supported. All right. Now, it's a lesson in trading as well. I mean, if you see a long bullish or bearish pin, okay, unless the candle closes below a significant level, then we can it's safe to say that a trend line is broken. But if the candle closes above and you see a long shadow, it shows that the trend line is still supported. Okay, so it's very important, that's why, to cross-reference to higher time frame. This is a good lesson to learn on, because if you look at this, I use Nikkei as an example. Yeah, if you look at the weekly chart, you can tell that, hey, this is a bullish pink candle. This trend line support might still be respected. Okay, but if you just simply stick to one time frame, and let's say if you trade on a daily chart or a 4-hour chart, right, if you just stick to one time frame, all right, it's simply on a downtrend here, and you wouldn't be able to see that on the weekly chart there's a nice bullish pink candle, which shows that a lot of buying support is still there. Okay, so it's very good to cross-reference different time frames to ensure that you have an overview of what's happening. Now, the best trends or the best trading is when the weekly charts, the daily charts, the 4-hour charts are telling the same story. And we had that kind of movement in late September, or for, I would say, the whole month of September and early October. Okay, where I speak to a lot of clients, a lot of them say, wow, the market past 2 months quite tough to trade. I beg to differ, because the market has been very trending. All right? And if you are a trend trader, you would have loved the markets for the past 2 months, because it has moved toward one direction, and I mean, the conviction, the bears on the euro dollar, for example, is very strong. So most of the trends are really, really strong. But where we are right now is a bit of a consolidation phase, and consolidation phase, you got to be careful, because that's where the fights between the bears and the bulls happen. So pick your spots in terms of where you want to enter and exit very clearly. Okay, so that is the Japan Nikkei for you. I have a question. Can you look at the DAX? Sure, let's look at the DAX now. For those of you that's not familiar, the DAX is basically the German index. Yeah. So, okay, let's look at the DAX right now. Okay, the DAX has broken a very key level. This is a weekly chart. Okay, this is a weekly chart. Okay, unlike the quite similar to the S&P in the sense that it made a new low, but the DAX for me is much clearer in terms of the new low, because if you see, this whole level here has been very strong support since 2013. Okay, this whole, I'll say around the 9,000 level, this whole area here. Now what happens that this candle here is a bearish engulfing candle, and he's broken a new low, and you can see that this candle pulled back, okay, close to the 9,000 level, and sellers came in again, which is why our weekly candle here has a bearish body. Okay, the weekly candle has not closed yet, but it's a very clear level. This whole level around the 8,900 to 9,000 level, this is where a key resistance level is. Let me just take a look. Let me just zoom out a bit to see if there's any trend lines. Okay, next level of support is around here. Okay, so okay, I'm going to just delete the trend line. It doesn't really matter, because we know that this is a key level. Now, the outlook for the DAX is this. Let me just zoom in a bit to a daily chart, all right? Now, we know that the key level is close to the 9,000, somewhere here. This whole level is a key resistance level. Okay? As long as we, quite similar to S&P analysis, as long as we stay below this key resistance level, there's every chance that the market will try to test the low it made last week again. All right, or early this week, as long as we're able to live below this level, because there's a lot of resistance around here. Okay, now just take note that there might be a potential channel formation here. Okay, I say potential because it's not really a nice chart pattern yet. There's only 2 touches here and not that nice touch. So now the reason why I like to draw trend lines and things like that, because when the market is entering consolidation phase, right, more often than not, it forms a certain chart pattern. and I always like to draw I try to make make out a pattern so that I can stay ahead of what's happening. Okay, so especially this current condition where the market's consolidation, try to look up for chart patterns. Okay, so for now, this channel might not be the nicest looking one. It might even be wrong, but I'm just putting it there just for me to have a gauge that it might happen. But of course, you still need to know your support and resistance, because this is the scenario. Now, I say that around the 8,900 to 9,000 is a good resistance level, right? Now, if we break above this level, there's every chance that we might slowly make its way back to the top around this resistance area. Okay, so I'm keen to see whether this channel will play out, but again, the 8,900 to 9,000 level is quite key. All right, so that's for the DAX. Okay, I have a question here on the Shanghai index. Let me see whether I think I have it here. Give me a moment, yeah. Mr. Lim, at Shanghai Hang Seng Enterprise Index. I don't have the chart here. If you could drop me an email, that'd be good. I can try to use the Bloomberg and have a quick look for you, but I don't have it here, unfortunately. So if yeah, you just drop me a quick email and I'll see what I can do for you. All right, so sorry about that. Okay, so moving along, let me just move on to the currencies right now. Again, if you have any questions, feel free to shout out, yeah? Okay, moving on to the currencies. I will start with the Aussie dollar because I think it's moving quite a bit from the China news. Actually, not much. The Aussie dollar has been sleeping for the past 2 weeks, yeah? Okay, if you look at the weekly chart, all right, basically we came down from the highs of 94 cents, and when the 92 key support level was broken, all right, that's where it started to trend downwards, and it came back all the way to the low of 2014 around the 86.50 level here. These two circles I drew last week. Yeah. So right now, weekly chart, it is on a downtrend, and what it has done is simply making a retracement. Okay, one thing we can infer from the weekly chart is that this whole level here is quite strong resistance around the 88.50 to 89 cents, because every time when bulls try to push it to the 89 cents level, the bears push it down again. Look at these two candles. Okay, every time when the bulls try to make a recovery back to 88.50, 89 cents level, the bears push it all the way down, and the candle cannot close anywhere close to it. All right, this is a really bearish pink candle. This one as well. Okay, now we are making a third attempt in the week, in the 2-3 weeks, to try to push it above 88.50, 89 level again. We'll see what happens, but all I know is that this whole level here is strong resistance. Okay, and if I'm bullish on the Aussie dollar, I'll be very careful, especially when the market goes to these levels again. Okay, so if you go, let's go to the daily chart. Now on the daily chart, okay, let me just bring this. Give me a moment. Okay, on the daily chart, let me just put this in. Okay, we can see that we have been consolidating for the past 2 weeks. In fact, the analysis is pretty similar from last week. Not much has changed. And if you notice again, this 8850 to 89 cents level, a lot of bearish orders are waiting here, because every time when the market tries to push above, it comes back down. Okay, so if you are trading the Aussie dollar, okay, and if you plan to trade it on a position type of trade, meaning longer term type of trade, you got to be patient, because right now it's just consolidating. Okay, my type of trading is I'm more of a swing trader, so I keep my trades for a few days. So I like to trade off key levels. So what are key levels for the Aussie dollar? Is basically this whole resistance level and this support levels. Anything in between here, I'm not too keen. Okay, but it depends on what kind of trader you are. Some of you might say that, okay, I like to trade this consolidation area here. Maybe I trade it off the 1 hour chart, the 15-minute charts. Possible. Okay, but if you like to trade on clearer levels on the day, then you might want to look at the daily and weekly chart to form your bias, form your levels, and through that you know that this whole level here is consolidating. Now, even though China news just came out at 10 a.m. Singapore time, didn't move much. I think the Aussie just jumped up at 20-30 pips. Okay, but not much momentum to this trade at the moment. Overall trend is still down, but it is consolidating. So again, draw these levels to see whether the trend will continue down or whether it will start to reverse upwards. Okay, just be very mindful of this resistance area. Yep, there's the Aussie dollar. Now let me move on to the Euro dollar. Okay, now Euro dollar is forming. See, I told you most of the charts are consolidating this week. All right, that's the theme for the past 2 weeks actually. Most of the forex charts especially. Okay, so this is the Euro dollar. This is what I drew last week, and there's not much of a change. The key resistance is still around the 12800 level. All right, on a weekly chart, it's still on a bearish trend. Okay, a bearish trend simply means that the market is making a series of lower lows and lower highs. All right, so making a series of lower lows and lower highs. So when I say lower highs, I'm comparing this to this. This is a lower high. This to this is a lower high. Okay. Now, how the market moves in downtrend is that it makes a series of lower lows and lower highs. If it wants to consolidate or if it wants to reverse to the upside, right? Sometimes what it does is that it will consolidate around this level. Sometimes make a cheeky lower low, and then it makes a higher high. Okay. As long as we do not have a higher high based on price action theory, there is no market reversal yet. Okay, so currently we are somewhere in this phase. The market is making a lower high. Whether the downtrend will continue or it will come to form a double bottom somewhere here, those are two possible scenarios. But as a traders, we trade based on probabilities. So we got to know where's the key support and resistance level to give us the highest probability of success. Okay, so right now where the euro dollar is trying to make a lower high. Key resistance is at the 128 level. Let me just switch my pen back. Okay, quite clear why the 128 level is very key. Simply because look at all this level here: support, support, support. Even here, support, and it might turn to resistance. Okay, quite similar story to Aussie dollar. Last week, the bullish traders tried to push it above it, only for the candle to close all the way below it around the 12744. So it again reiterate my emphasis that the 128 level is a key resistance. Going to a daily chart, look at this. Okay, we have a formation called a bearish flag. You guys know what a bearish flag is? Happens all the time. Okay, something like that. So let me just take away some of these circles here. So this whole level here is resistance. Okay, and use this channel to guide you. Okay, use this channel to guide you because this is a classic bearish flag formation. Now, bearish flag is a continuation pattern. So if the pattern is correct, what happens is that the trend should continue to the downside. But again, this whole level here for 12800 all the way to around 12850, this is all key resistance level. Right now, we are looking to test it. So of course, there's some Euro news coming out, like what Ryan said later this week. So just be mindful of this 128 to 12850 level. This is a strong resistance area. Okay. Now, even though there's news coming out, it's still important to look at the charts. Okay, because the charts allow you to infer, allow you to make a lot of educated assumptions in terms of what might happen. Okay, so because even let's say if Euro prints a better okay, let's say for example, Germany or France employment came out much better than expected, but on the charts, the euro dollar still could not break above this resistance level. What do you think will happen? Do you think the market will go up or go down? Just a quick question. Let me repeat. Let's say if out of the blue tomorrow, if France comes out and it says that the employment figures are much better than expected. However, the euro dollar is not able to break the 12850, 12890, basically not able to break this resistance area. What do you think might happen? Okay, I have a few answers here. Down euro, exactly. Okay, so the charts to me is very, very important because it doesn't lie, and it basically shows you where the buyers, where the sellers are, and what the momentum is doing. Because at the end of the day, we are all retail traders. We're not here to move the markets. Yeah, unless one of you are trillions of dollars, but we are not here to move the markets. We are merely followers of the market. So even if the news release, for example, like France is much better, from France is much better than expected, but the euro dollar is unable to break a key resistance. Okay, I'm more inclined to think that maybe the bullish traders are not that keen to long the euro at the moment, and it might still continue downwards. Okay, so always balance out fundamental analysis and technical analysis. All right, cast your eyes on both sides to make you a better trader. Okay. I have a question here. Do we use the same TA technique you're doing now even when we're intra-trade trading? Okay. Okay, Roy has a question here. The question is, do we use the same TA technique you're doing now even when we are intraday trading, meaning the same technique but in smaller time frame like 1 minute or 5 minutes? Yeah, good question, Roy. So basically, I think Roy is a bit of a scalper or short-term trader. Maybe he trades in the 1 minute or 5 minute charts. And the question is whether I can use the same techniques on the shorter term time frames. The answer is yes. Yep. Because price action works in any time frame. The main difference is this. Your support and resistance levels got to be more precise. Because I'm analyzing based on daily and weekly chart, right? So I always say that, for example, like say euro dollar, the resistance is around 128 to around 128.50. That's about a 50 pip zone. But when you are trading on the short-term charts, you cannot have a 50 pip zone because you're targeting only what, 10 pips or maybe 20 pips max. So you need to be a bit more precise. But in terms of price action, and which is I'll give you guys snippets of price action every week when I do my webinar so that you guys are able to understand what is it all about. In terms of price action, this kind of action appears on any charts. Okay, so since we're talking about that, let me just go into a shorter term time frame. Let's say I go to euro dollar 5 minute chart at the moment. Okay, so you can see on the 5 minute chart, same thing happens, all right, in terms of price action. Okay, so if I draw my support and resistance here, sorry, I'm deviating a bit from the live market analysis just to give a bit of education, yeah. Okay, now, if you notice that the whole, what the market is doing here is basically in consolidation mode. Okay, it's in consolidation mode. Okay, but what happened is that when a high was broken, this is the previous high, this is the previous high, okay, it simply made a higher low, another higher high, okay, another higher low, another higher high. So once we form such price action, right, we know that this is an uptrend. Okay, another higher low. Oops, sorry. Okay, another higher high here, another higher low, another higher high. So this whole level here, we know that we are on a uptrend. It's just making a series of high lows and high highs, and this comes after we were consolidating here. Okay, in fact, some of you who are very good at chart patterns can even see that, hey, this is a inverse head and shoulder. Okay, because this is the shoulder, this is the this is a head, this is a shoulder, and this is a shoulder. Can you guys see that? For those of you that like chart patterns, this is actually an inverse head and shoulder. Shoulder, head, shoulder. And this whole area here is a neckline. So when neckline was broken, it started moving on the uptrend. Now the trend actually changed over here because this low here was broken by this low. So that's where it made a lower low. And after that, what happened was that this is what I call lazy trading. All right, I think there's not much liquidity here. So after it made a lower low, it made a slight lower high here compared to this high. See, lower low, lower high, another lower low here, another lower high here, another lower low here, and then this is where it changed your trend again. But safe to say that this whole area here is a bit consolidating as well. So even if you trade a 5 minute chart, it is still possible to use price action as support and resistance. All right, it's just that your support levels got to be a bit more precise, and you need to factor in noise. Sometimes it might not be accurate because there's a lot of noise in short-term time frame. So I suggest you still might want to look at the high time frame. So if you're trading off the 5-minute chart, cast your eye on the 15-minute chart, 30-minute charts, or even the 1-hour charts to have a better overview as well. Okay. Sorry about that. Okay. I hope that explains your. I hope that answers your questions, Roy. Okay. Okay, I have a question here. Oh, thanks for coming, Mr. Wu. Dollar Swiss. Okay, moving along. Okay, I try to throw in a bit of education here and there when I do my live market webinars. Okay, so all these are recorded, so when you have time, you can review it on our website. Okay, so let me move on. Before I go into dollar Swiss by request, let me move on to dollar yen. Okay, dollar yen. Okay, let me go back to my weekly charts here. Okay, this is dollar yen. Last week when we were doing the analysis, we were lingering near the 107 level, and I did mention that if 107 is not really a strong support, because even if I zoom out, sorry, my charts are not catching up. Just give me one moment, yeah. Okay, so sorry for the technical hiccup there. I think the charts is in Deepavali mode already. Okay, cool. So on the weekly chart, okay, last week I did mention that the dollar yen, we were lingering around the 107, but I did mention that 107 wasn't that strong support because if you zoom out of the charts, it's hard to find 107 as a key level. But 105 was a key level, 105.50, simply because of the previous swing here. And what it did is that it came down, touched 105.50, and it bounced back up immediately. For those of you that trade the yen pairs, right? Again, I repeat, for those of you that trade the yen pairs, you got to be very mindful that the yen pairs move like that all the time. Okay, I got a lot of clients, I think maybe they buy it around the 106 level. Okay, the market pushed down to 105.50, hit their stop loss, and then it shoots back up again. Okay, just be very, very mindful of the yen pairs. It reacts off support and resistance in an instant. It does. If you look at the daily chart, right, you notice how the market reacted off the 105.50 level. You see, it made a quick bounce, and then it shot up by about 50 pips, just like that. Okay, so just be mindful of how the yen pairs moves. You need to give a bit more buffer. So dollar yen, okay, if you look at the weekly chart, it is still bullish because all it has done is simply made a higher high and a higher low somewhere here. Okay, so the analysis is this. Now we are back along the 106 to 107 level. And can we go back to the daily chart? Okay, now we are staying somewhere lingering around the 107 level. Now, if we manage to stay above 107 for the week, there's every chance that it might continue to move its way up to test the highs of 110 even. However, if the 107 is being respected as a resistance, what it might do is that it might come down to visit the 105.50 again and back to this trend line here, somewhere along the trend line. Okay, because be mindful of this trend line that we have going on here. It's quite a good trend line because it touches. It's got one touch here, two touch here, sorry, two touch here, three touch, and possible fourth. Okay, so right now the weekly chart is still bullish. The big question is, where do you take your where do you see support from? Okay, so my gauge is at 107. If you're able to leave it above 107 for the week, it might make its way back up. If we stay below there, there's every chance that it might come back to this trend line support. Okay, so that's the dollar yen for you. Okay, I have a question here. Now in price action, how do we decide when to enter and exit a pair? Also, what price should we set the stop loss or take profit? Now, when we talk about price action, we always study swings. Okay, swings. So for example, just taking a weekly chart. Now let me answer the questions on how to enter and how to exit. Okay, now when we talk about price action, right, let's say it's on an uptrend. Once we establish the bias is on an uptrend and we are only looking to buy, the next question we want to ask ourselves is, where is my support? Okay, where is my support? Because we do not want to buy a resistance. It's not the smartest thing to do. Okay, so even if you know it's on the uptrend, I think I covered this a bit last week. Even if you know it's an uptrend, but if the market is close to resistance, that's the worst possible place to buy. What we want to do is at least come down to some kind of support level here and hope that the market goes up. Okay, because this gives us a higher probability. Now, when you buy at a support level here, where's your stop loss? A reasonable stop loss will be below the previous swing. Okay, because if the market goes down and breaks the previous swing here, most probably the trend has reversed. Okay, so key thing here, using price action, one, establish the bias first. So if you look at dollar yen, the bias is bullish. Okay, simply because it made a higher high. And the next level is you want to look for support to buy. Now, if you notice, support is actually what we call a higher low. Okay, it's actually a higher low level. So we have made a higher high here. The question is, where's the higher low? Is it at 107? Is it at 105.50? Or is it back this trend line here? There's no 100% in trading. Alright, so that's where I bring in another concept called multiple time frames. So for example, if I say, okay, weekly is an uptrend, I want to buy, I will start looking for support. And when it comes to support level, let's say it comes to 105.50, that's where I'll zoom into a lower time frame, let's say the daily chart or the 4-hour chart or the 8-hour chart, and try to see how the market reacts to those support levels. If I'm convinced that the shorter term chart is coinciding with my long-term bias, which is bullish for dollar yen, then I'll jump in. Okay, so this is just a quick lesson on price action for you. Yep. Any other questions? Okay, so moving along, I have a question on Singapore blue chip. Okay, I'll cover that really soon. Yeah, I just want to cover a few more things before I go to that. All right, so okay, pound dollar. Okay, let me touch on pound dollar. Pound dollar, I have another lesson for you there. Okay, now looking at the pound dollar weekly chart. Okay, bearish or bullish? This is still quite bearish, isn't it? Even after the a lot of news coming up from the UK, which is not favorable to the economy. So 163, once it was broken, it was quite bearish. Now last week we were somewhere around the 159.50 level, and I mentioned that the 159.50 wasn't the best support level. And what happened was that the market made a push lower to the 159.00 level. Okay, somewhere here. Okay, it made me happy. Why? Because at least the market is reacting off a better support. Because 159.50 I mentioned was a quite flimsy support. So it made a push lower and then it shot back up. Okay, very interesting candle we have here. It's a bullish pink candle. So maybe it shows that the market might want to consolidate around here. Because it has been a downtrend for the past, 3-4 months. Alright, so basically lower low, lower high, lower low. And right now, it might come back to a resistance level. Okay, this is a weekly chart. So weekly chart is bearish, yeah? Now, this trend line that I drew last week, we are in a similar position. Basically, for those of you, I think last week we were somewhere here. Okay, and somewhere here. Okay, and I did mention that if you think that if you want to take a counter trend trade to the upside, you need to at least wait for it to break this resistance trend line here. Where what happens is that it did not break the trend line. In fact, it respected the trend line as a resistance and it came down and made a new low at 159.00 before shooting back up. So such price action tells me that, hey, maybe the market wants to consolidate a bit more. All right. Now, I have a quick lesson here in terms of trend lines and support and resistance. Now, this trend line is a nice trend line, isn't it? You can see that is resistance here, resistance here, resistance here, resistance here, resistance here, and potential resistance here. Okay, so this is a nice trend line. Okay, some of you might say that, hey, Nabil, this little bullish candle here seems like a break of the trend line, isn't it? And should I buy? Okay, so the question you ask yourself is this: yes, this might be a bullish breakout to the upside, but you are feeling to, if you are buying it just here, you are feeling to recognize that there's a minor resistance around the 16180 level, 16170, 16180 level. If you notice here, support, support, resistance, resistance. So even though your trend line says that it might be broken, there's another level of horizontal visual resistance here. Okay, so don't just be so keen on just looking at the trend line as a gauge. Always look at your visual support and resistance lines as well. Alright, because don't forget that trend lines are discretionary. Trend lines are discretionary, I repeat. Some of you might draw it like that. Some of you might put it wider and draw it like that. You see a difference? If I just shift it wider, it's still touching it. Okay, but it's still resistance. But whether I draw it like that or I draw it like that, I know that this level here is still resistance. So it doesn't make sense to buy resistance. Okay, so don't be so quick or don't be so keen to just jump in the boat and just long it just because you see it's a break of trend line. Because don't forget, trend lines are discretionary. Alright, so you've got to give it a bit of buffer as well. Alright, so pound dollar right now is entering a consolidation phase. If it breaks this key level here, 16180, most probably is going back to a key level around the 163 area. Okay, but the overall trend is still bearish. Daily chart, I think, is looking to consolidate a bit more around this level here. Okay, it's quite similar to the other pairs in terms of the outlook. Okay, so just look at the ones. If the level breaks, look around the 163 level. That's for the pound dollar. Okay, so now let me just cover a few more things before we wrap up. Okay, I got questions for dollar, Swiss, and Kiwi. Okay, let me just cover this too. Oh yeah, I have the Singapore blue chip as well. 3 more charts and then we call it a day. All right, because we're running out of time now. Dollar Swiss. Okay, dollar Swiss, I use it as a proxy for the dollar index. Okay, because dollar index, as you know, is a futures market, so the charts are not the nicest when it comes to plotting your technical levels. Now, the dollar Swiss weekly chart, it is very bullish, still very bullish. These were the lines I drew last week. Alright, obviously the key support level we're looking at around the 94 cents. I expect some form of buying support around the 94 cents level, which could see the dollar Swiss move back up. Okay, whether it will make a new high, I don't know, but this 94 cents seems to be quite good support. Now, if the dollar Swiss respects 94 cents, most probably the dollar pairs like euro dollar and pound dollar might drop. Okay, so just take note of these levels here. Actually, we are quite in. We are looking at key levels for this week because your euro dollar, pound dollar, they're all testing key resistance levels, and your dollar Swiss is testing a key support level. Okay, so if everything plays well, if dollar Swiss 94 cents get respected to the upside, most probably a euro dollar and pound dollar will start dropping again. Okay, but it is on the uptrend at the moment. Let me see whether on the daily chart how it looks like. Okay, daily chart, you can see that it came down quite a bit from 97 cents area, and the past few candles could not break the 94 cents. So this whole area here will be something you want to pay attention. Okay, around 94 cents level. It's quite good support here. So what the market might do sometimes, if it tests the support, it might start moving up. Now whether it will go back all the way high or it will come down again, that's another analysis altogether, but 94 cents looks to be quite good support to me. Okay, let's talk about Kiwi dollar at the moment. Kiwi dollar, very similar analysis to the Aussie dollar. Okay, again, does this look familiar? In fact, it looks even closer to the euro dollar. Right, let me see whether okay, let me just show you the euro dollar. Now, if you guys are trading or with IG, okay, you can actually use Pro real-time charts and you can compare this thing called compare security. Okay, and basically you can compare two currencies, you can overlay on top of one another. Look at the euro dollar and the Kiwi dollar. Does it look exactly similar? Quite ridiculous, isn't it? So exactly the same, bearish flag formation. Okay, so bearish flag, let me just take this away first. Yeah. Okay, so back to the Kiwi dollar. So what happens that we have made a downtrend and it has formed a flag. Okay, this one's more of a pennant than a flag. Okay, but the whole thing is still a bearish flag formation. Okay, and this is a continuation pattern, meaning that if the bearish flag formation holds true, most probably it might come to the downside again. All right, the key resistance level for the Kiwi dollar has been so bearish, so we need to zoom out a bit to see where the resistance is. Okay, let me see. All right, the key level here, first level is around the 80.50, and the other level here is around the, let me see, 79.80 level. Okay, you can see a few touches here, close to 79.80. So anywhere at this pennant resistance is a key level for the Kiwi dollar. Okay, but look out for a break below this, because if we break below 79 cents and we break below the wedge support, chances are we might come to test the bottom again. Whether it will make a new low altogether is another question, but it might test the bottom for October again around the 77 cents. All right, so use this pennant as a guide. Right now we're just trading in between. Watch out for both sides for breakouts. Okay, so that's the Kiwi dollar. Okay, two more before I wrap it up. I had a question on Singapore blue chip. Okay, so this is the Singapore blue chip. Now, for those of you that trade this, the Singapore blue chip tracks the SIMSCI, all right, the MSCI Singapore Free Index. All right, we track the futures. So the Singapore blue chip, quite similar story to most of the indices. I mean, it's quite amazing how the different markets look quite similar, especially like the S&P, the Dow Jones, the Hang Seng, the Nikkei, and now Singapore blue chip. All of it is testing a key support level. All of it is testing a key support trend line. So same thing for the Singapore blue chip. And a lot of it has formed this candle last week, the bullish pin candle. Okay, which goes to show that there's a bit of a fight at the moment. Okay, so Singapore blue chip is a weekly chart. It's not as bullish as other indices, because even though a lot of indices rallied for most parts of 2014, the Singapore blue chip has simply formed a huge consolidation area. Okay, key level you want to look out for, this is still quite far away, around the 342. And the other level you want to look out for, this is a quite important level. Let's see, 36. Let's put a 356 level. Okay, because this support level coincides with trend line support. So the 356 level is a clear break to the downside. There's every possibility that we might test the support all the way back to 342 level again. Okay, so just take a look at this 356 level. Now let me zoom into a daily chart. Daily chart is still on a downtrend. Alright, so for the weekly trendline support to be respected, or if you are bullish based on weekly trendline support, the least you want to wait out for is for a daily chart to form some kind of consolidation here and maybe start going up from here. Because if daily chart does this, if the daily chart does this, then most probably your weekly chart support is still held. But if the daily chart breaks the 356, then most probably it's coming back down, test the 350 support, and all the way back to 342 support level. Okay, so that is the Singapore blue chip for you. Last one. Let's do gold. Okay, gold is in quite an interesting level. Okay, I think I did touch a bit on gold last week, and this is what I drew. Remember, this is a gold weekly chart, and it has made a series of lower highs for the past 1.5 years, which tells me that gold is a bit bearish. But if you look at the overview, I mean, it is consolidating in some kind of a wedge pattern. Okay, what it has done recently is that it has bounced off the key support of 1180. All right, 1180 was a very, very strong support. Tested. Okay, let me zoom out to see whether it tests. Okay, tested all the way of 2009, around 2010, 2013, 2014. So 2180 is a level you want to watch out for gold. Okay, it has been supported last month and it has formed a bullish engulfing candle, which means that the bulls are in play at the moment. This level, which I drew last week around the 1240 to 1250 area, is a key resistance level. Okay, whether it has broken or not will depend on this week's candle. Alright, for me to be convinced whether this level is broken, but this is quite a strong level. Because if it's respected, most probably it's coming back down. But if it's been breached, then there's a possibility that we might test the next level of resistance, which is around the 1270, which happens to coincide with this trend line that I drew. It's not the best trend line in the world, but again, when the market is consolidating, I like to draw trend lines and try to form some kind of chart pattern so that I have a better understanding or better guess what might happen next. Okay, so it might come back to test the 1270 area if the 1240 level resistance has been broken. Okay, but gold simply, if you're looking at long-term trends, is quite consolidating. Okay, there's not much of a trend at the moment. Okay, daily chart, you can see that there's a bit of a nice reversal. These highs have been broken. So daily chart is on an uptrend. So if the first sign of uptrend has happened, we form a higher high. If we form a higher low, which means that if we do something like this, okay, then there's every chance that it might start going higher. Okay, but the first sign of a reversal is there. We form a higher high. The next thing we want to look out for is whether we form a higher low. Okay, so that's gold for you. All right, so any other questions? Nothing. All right, as usual, so if you have any feedback, please email it over to me, and every week we'll try to improve how we do things and try to keep it within the time.